one of the most important notification issued by Ministry of Finance recently, that is on 18 January 24, and which has been talk of the town because it relates to International Financial Service Center, that is 𝐓𝐫𝐶. Hi, this is C. Abhishek and welcome to this channel, The Learning CA, where we keep posting relevant content in the area of international tax, transfer pricing, and FEMA. This notification is going to be important for tax and accounting professionals who wish to render the services to the non-resident clients as well. So be in this video. This video is going to be important for you, where we're going to interpret that notification. But before going to that video, please do subscribe to our channel, The Learning CA, where we keep posting content in the area of international tax, transfer pricing, and FEMA. And if you are a tax and accounting professional, it is must for you to subscribe to this channel.
Also, I wish to tell you that we have come up with an exclusive India transfer pricing course for professionals only who want to practice in the area of transfer pricing, as also who want to do the job in the transfer pricing domain. So this course is relevant for those people. It has 900 plus topics. The entire content is not more than 17 hours. So you can complete actually in 9 days the entire thing. And there are subscription packages which are very affordable for the professionals. Do reach out to us for booking your demo call. You can find the link for booking the demo call in the description box below.
Now we come to the main topic, that is the notification which has been issued by Ministry of Finance on 18 January. Under the Act, under the powers conferred under the Act, that is the International Financial Service Center Authority Act. You're going to interpret this particular notification, how we understand that, how this can help us, that is as a tax and accounting professionals, in expanding our business in overseas market. But before going to this particular notification, let me just clarify this, that this entire video is for information purpose only. Please don't consider this in form of any sort of advisory from my end. The interpretation are my personal opinions only and my personal interpretation only. If you want to set up your unit, or if you want to take any positions on this particular notification, I would strictly request you to consult a tax expert before taking any sort of positions. I hope that clarifies. This video is for informational purposes only. Now we're going to understand this particular notification quickly. Now, if you see here, the following 4 services have been considered or have been notified as the financial services under this particular act, that is International Financial Services Center Authority Act. Now, what are those 4 services? First is bookkeeping services, which technically includes supporting the client in maintaining the books of accounts. Then accounting services, which might include also preparing of financial statements, balance sheet, profit loss, MI statements, or certain record to report or pay to procure to pay sort of services, which are called accounting services in general terms. Then taxation services, which technically includes filing of tax returns and doing the tax compliances, etc. So such are taxation services. And financial crime compliance services, this have been specifically defined under the explanation given under this notification. You can understand this explanation as well. Right. Now, providing of the services, you will be able to provide that services from IFSC, that is International Financial Service Center, which is right now located in the GIFT City, Gandhinagar. If you don't know what is GIFT City and what is IFSC, you can also refer to my earlier video. I'll be sharing the video over here. You can access that video. You can understand what is GIFT City all about and what is this IFSC. Now the units can provide the services. The units that is they are based out of IFSC can provide the services as well, but there are certain provisions and restrictions on that part that we need to understand what we from this notification. Now you understand that 4 services have been notified as financial services which can be provided from the IFSC, that is a unit which is there in IFSC. Now, but there's a provision. You cannot provide the services under certain circumstances. What are those? We are going to understand that. First, these are the 4 services. Then there's a provision. The provision says that financial services shall be offered by the units. So there should be a unit in IFSC regulated by the IFSCA authority, that is fine, to non-residents. That is, this services can be only provided to non-residents, and apart from that, to non-residents whose business is not set up either by splitting up of business already in existence in India or reconstructing of business already in existence in India or reorganizing of a business already in existence in India. So now here, when you render the services to non-residents, you need to also check on these conditions. That is, the non-resident business has not been set up either by any of this condition. That is, either by splitting off the business already existence in India. Like if a non-resident has already his business in India, its business in India, it should not be provided. The services should not be provided to such non-residents who have splitted that business and have splitted that business from their existing business from India or any of this particular conditions. So you have to check this particular conditions when you render that services to non-residents. Further, the provisions, there's also an additional provisions, the second provision, which says that the unit shall not offer the services by way of transferring or receiving of existing contracts or work arrangements from their group entities in India. So now you need to take an example. If there's already there's already a BP or KPO entity who is rendering the services, this type of services to non-resident entities, then the services which the unit is going to offer should not offer to the same sort of, same under same clients or same contracts. These services cannot be offered. Technically, the government is trying to curb the tax avoidance practice which the existing BPOs or KPOs may do right now by setting up their units. It means to say that whenever you set up a unit in IFSC, the contract should be the new, the work arrangement should be the new, and the services should be provided to the non-residents who have not set up their businesses by splitting up or reconstructing or reorganizing that business which is already in existence in India. Also, one of my interpretation, that could be a controversy as well, controversial interpretation as well. But what I understand is also that you need to provide the services from the IFSC center only. That is your unit only. You cannot outsource also rendering of the services to your group entity which is based in the Indian domestic territory. That is also one of the understanding of this particular provision which I understand. Apart from this, let me also draw your attention to section 80 which actually provides a deduction of 100% on the income which have been earned by the units in IFSC. I hope that will be also relevant for you when you make the decisions. So I hope you have liked this video. If you have liked this video, please do hit the like button and also subscribe to our channel, The 𝐓𝐫𝐚𝐧𝐬, where we keep posting such content in the area of international tax, transfer pricing of claim. This is 𝐓𝐫𝐚𝐧𝐬𝐼𝐶 signing off. Thank you.